So today is Thursday, 16th of July, and coming into the market open today after yesterday, it ended up being a relatively flat day. There was a bit of volatility coming into the open, but as the day progressed, it kind of stabilized, and coming into the close, most of the indices closed relatively flat on the day. There was a little bit more movement on the Nasdaq, but for the most part, it's still kind of closed in a similar range compared to the prior day and throughout this week. So no real movement so far. So just showing the Dow Jones as well and the IWM, nothing really to be concerned about. It seems that the market's still kind of digesting the rally that we had throughout April and May, and for the most part, it looks like the market just wants to consolidate through time as opposed to consolidating through price, which is definitely constructive. And you can see in the VIX, no real movement there, and the dollar index is also staying flat. And actually, this kind of key breakout level is holding for now, but is clearly being tested. It's been tested multiple times, and the fact that yesterday there was actually a close through that level, it's definitely a good sign. It's definitely a good sign for risk assets and equities continuing higher. If the dollar did just continue to break out from here, I'd be a little bit more concerned about the rally in equities having much more further to go, and will probably favour the downside. But the fact that the dollar index is stalling out is definitely constructive. So the iShares semiconductor ETF is probably telling the biggest story for me at the minute. The fact that there's been multiple closes through the 50-day moving average, the fact that it's still kind of, well, not still, it's clearly in a downtrend, and there's selling in the semiconductor sector. So the fact that that was a leading sector throughout April and May, and the market's still holding strong for the most part, is definitely constructive in my opinion. And similarly for the space stocks, they were also another leading sector, and the fact that they've been beaten down so much, coming into their 200-day moving average, whilst the market's still staying strong, it means that kind of risk appetite's still there, I guess, in terms of the market is looking, or the even though this profit taking's happened in these leading sectors, it's rotating into other sectors. So there's potentially opportunities to come, or there's also meaning that there's potentially a fair bit of cash on the sidelines waiting to get in as well. So the current leading sectors with clear breakouts would be the healthcare and biotech sectors, and currently going through a bit of a pullback, but holding the 20 days as support pretty well. So I'm curious to see if there's going to be continuation here. It would make sense that there would be coming into this next earnings season. This could just be the momentary pullback before things start to kick off again. So coming into this earnings season, it makes sense to really give attention and focus to biotech and the healthcare sectors, as they can run the most anyway. They're definitely the most volatile. I mean, for the most part, they're usually high volatility names and lower market cap stocks, which give them more room to run. So in regards to the energy sector ETF as well, that's also kind of looking like it's any momentum that it had throughout Iran US has kind of been negated now, and there is a momentary relief as Iran and US did escalate again, but it looks for the most part just like typical market structure, backfilling this gap here, and it would most likely continue to chop in this range or just continue to sell off. But point being is that there's no real warning signs there. Commodities, gold and silver continuing to sell off, looking like silver's made new lows today. And oil is just kind of stalling out in this gap area. So I'll be curious to see whether it can push higher or if it will just kind of stall out here and then kind of revert down to this low here. Bitcoin was looking constructive on Tuesday, and then yesterday it kind of just tells a story really in regards to the fact that risk doesn't really want to re-enter crypto right now. If it did, in my opinion, this day yesterday should have been a clear follow through day. It should have been, okay, Tuesday was the sign that strength wants to re-enter crypto, and Wednesday should have confirmed that, and it didn't. It just kind of stopped out at these range highs again. So the fact that that happened, I wouldn't be surprised to see it just kind of continue to chop around here. And I guess ideally, it would make sense for the market to just chop around these lows, hold these lows, and wait for the higher time frame moving averages to catch up. And then when they do catch up, that's going to be the trigger for the market to accept that prices have stabilized and that things, or the next cycle, can begin. In regards to breadth indicators, nothing really to say about the 20-day stocks above 20-day moving average, just holding around the 50 mark. There was a bit of movement yesterday in the 1 month stocks making new monthly highs, but for the most part, nothing major. Similarly for the 52-week highs and the 52-week lows as well. Bond yields had a little bit of movement, but nothing major. And they definitely are in an uptrend, but the fact that PPI also came in quite soft yesterday, lower than expectations, is definitely constructive in terms of rates staying where they are and inflation kind of stabilizing. No major news for the rest of the week, so I feel that probably throughout today and tomorrow it's going to be relatively flat, and that not much movement will happen. I just realised I didn't bring that onto the screen. And then primary breadth indicators, we'll stop these primary breadth indicators, another flat day. So yeah, just showing that the market's undecided. The market doesn't know what it wants to do right now, and it's, in my opinion, it's healthy. It's needed. A cooling off period is needed. Ideally, I'd like to see some strength just so I can start trading again. It's been quite hard sitting on my hands and not doing much, but I will be patient. I'll continue to be patient and just wait and take what the market gives me. So going into today, I guess I'm neutral, kind of neutral, no real bias coming into today.